Hey traders, John Howell here. We're going to be doing a market update for you today. We're looking at all the stock market, we're looking at all the indices as well too. And the purpose of this video is for twofold. One, I want to just give you an update on what's going on with the markets right now. A bit of a technical analysis update. And then also two, I want to share a story with you that happened with me a while ago that I think is important with this current situation we're in right now. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into the update now. Here we go. Okay, cool. All right, so you guys make sure you go down to johnsfreegift.com to grab your free trading course. That's actually a brand new course that I recorded only a few weeks ago. And it walks you through all the different phases, phase 1, phase 2, 3, 4, and 5, about trading systems, the biggest mistakes you're making right now, and stuff like that. So go grab that trading course, guys. I promise you're gonna absolutely love it. If you're struggling right now, you're gonna really love that. So let's actually get into the actual market itself. And one thing I want to, let's actually bring this up here. So one thing is really important to my trading is always looking at small picture, big picture, small picture, big picture. So if I look at the small picture right now, small picture means for the last sort of maybe say 3 months, maybe even say 6 months, right? 3 to 6 months is that's the real short-term picture. The big picture is what's happened over the last couple of years. And so the thing that I'm always looking out for is I'm always looking out for simple trend analysis, but I'm also looking out to see where is it in conjunction of a simple moving average. So right now, what we're looking at right now is we're looking at a daily chart. Okay, so we're looking at a daily chart, but the thing is that I've got a 52 moving average on here. 52. Now, why 52? Well, there's 52 weeks in a year. To be honest, I've just stuck with 52 because I've been trading markets now for almost 2 decades. And when I first got trading, my first few years, I got access to a really successful short-term trader who was trading like 5 and 10 minute charts. And he would use the 52 on the weekly charts, on the daily charts, and on his entry and so on and so forth. So he just used 52, on the charts. And I'm just always stuck with the 52. I think 52 is actually pretty good. Now, what the 52 does for me is this: is that whenever I'm looking at the markets, I'm using it also in conjunction of the direction of the moving average. So wherever the direction is, that's more like a momentum indicator, where the momentum is. But also what I'm using, and as you can see here, right, if I'm looking at, say, if I'm looking at the momentum, if I'm looking at the momentum, I can see here the moving average is like a momentum indicator. See how, if you look at this here, right? So we have what? If this is sort of like a roller coaster, right? It's actually pretty flat, right? See through there, it's actually pretty flat. So we're flattening out through here. But then guess what? The roller coaster got a little bit steeper, and then it got a bit steeper, right? So if you're looking at the roller coaster, see how it's gaining momentum? We're flattening out, we're slowly getting better, and then it just starts to fall off. The purpose of that, because it's actually showing you at that time that there is strong momentum on the downside. And the thing is, we want to be trading with momentum, right? We want to have a momentum boost behind our trades. So I'm always looking at that to see where is the momentum with that, because if I'm looking for the best trades for me to get into, I want to make sure I'm trading with that strong momentum, and that's the reason why I use that. But also, what I'm looking at, what I'm using it for is I'm also using it for with conjunction of the it is how far away is it? I used to use the stochastics, the RSIs, the MACDs for the overbought, oversold levels, but then I realized that they would sometimes be pinned, right? They'll be pinned, overbought and oversold. And I'm like, okay, is it overbought? Is it oversold? Is it not? So the best thing that I do is I let the market tell me, instead of using indicators for oversold, and I let the moving average tell me. And you'll notice one thing here: the market only gets a certain distance away. So this here, you can see that's a certain distance away before it comes back to it. Certain distance away before we come back to it. Through there, right? We got a certain distance away before we made a double bottom, and we almost came back to it here. We got a certain distance away, and guess what's happening? We're coming back to it. So for me personally, looking at this here, you can see how, and if I just let me actually just blow this chart up a bit more. There we go. Right, so if I look at this here, and I just use, if I squeeze out, you'll notice that, now I'm looking at the last couple of years now, the purpose of that is notice one thing. Notice how when the market gets too far away from the moving average, it comes back to it. Too far away from the moving average, comes back to it. Now, how can you use that in your own trading? Well, if you're using a 50 moving average, call it a 50 moving average, but I use a 52, right? The 2 is important, guys. the 2 is important. So, if I'm using my 52 moving average and I'm actually looking to get into a trade, but if I'm looking to get into a long trade, but I can see how the market's too far above, that's giving me oversold, because what's likely to happen really soon? What's likely to happen? We're likely to come back to the moving average, right? So that's where, looking at high probability entry points, I can see if I'm looking for long signals, and if we're too far above, and as you can see, every single time we've actually gotten too far above, we actually pulled back. Too far above, we get pulled back. Too far above. So if you're looking for trades, as the market starts to get through here and here and here, you realize, okay, maybe I shouldn't be taking a trade because we're too far away from the moving average, and there's a high probability. Yes, it can continue, right? Especially with those vertical booms, but on a probability basis, a probability we're going to start to get a bit of a turning point soon, because we're the maximum distance away. And how you look at the maximum distance away is you just look at the average, right? So if I use let me use a trend line here for a minute, and I'm going to bring this in. Let me just make this a purple. I'm going to make this a purple for you guys. And the thing is this, right? Let me actually make this thick here. So you'll notice if I just draw a line here, right? If I draw this line here, actually, let me just bring on, I'll do that. No, you know what? I'm just going to stay with that. So if I draw a line, if I do it from here to here, you'll see, okay, that line from there to there was the maximum distance away from the moving average, right? Before it got away. Then if I use that exact same line, you can see, oh, look, see how that was almost, or pretty much spot on, the exact same distance away from the moving average before we pull back. This one here wasn't big. This one here was a lot smaller. This one here was a lot smaller. This one here was a lot smaller. So you can see here, that was a lot smaller. That was a lot smaller. So you can see the average is a lot smaller, right? Now we're on a downward trend. We do it for the downside, right? The maximum distance away, actually, look at that there. The maximum distance away is that there before what? Before it starts to come back. Maximum distance away before it starts to come back. Maximum distance away. And as you can see, right, this line here is actually the exact same line I drew back here for the maximum distance away. So we got that through there before we started to come back. And look what happened here recently. Notice how we got pretty much to the maximum distance away, and now we're coming back. So you see how this is not random stuff, right? This is just the flow and ebbs and flow of the markets to show you how we're getting to the maximum distance away from the moving average is showing, okay, we're now too far away. So if you had this here and you're looking to go short, but then you say, okay, look, it's actually getting pretty far away from the moving average now, you wouldn't want to go short, right? You're like, okay, it's like there's a high probability we're going to get a pullback first. That's why, for me personally, whenever I'm looking at the maximum distance away, I'm always seeing where we're at. So now we're getting when we're not in the maximum distance away, we're in this downward slope. But what do we have here? Okay, what do we have here? We go back to that small picture here. Firstly, what do we have? Actually, you know what? Let's actually bring up to us the last 1 year worth of data. Firstly, we're in a pullback here, right? But what is also happening? There's actually three things happening. Firstly, there is a trend analysis. So we have these lower highs all the way down. We have, see how the momentum, once again, see the momentum, the moving average is very steep. That's showing there's a lot of momentum on the downside, right? And then also we're getting a pullback. So what I'll be looking for this week to see, lastly, I didn't do this, did I? No. But lastly, there's also, let me do that again. All right. Actually, you know what? I'll just make this one right here. All right. I'm just going to make that real thick. There we go. Bam. All right. So this blue line right here is also what? A major resistance line. So what I'll be watching for this week is to see whether we do something like this. And then if we get a very big, nice, strong breakout, that's probably going to be the start of another rollover. So I'm going to be watching this week to see what actually happens with that myself. Because every single time we get a pullback and then we get some sort of a sideways movement and then a breakdown, it's the start of the next move, right? Look at this here. Pullback, we've got a pullback towards the moving average, sideways, breakout bar, move. Up, not much going on there, but then we dropped, came down, right? Sideways movement through there, right? Breakout bar down, up. If we get a bit of sideways movement through here, and then we get a breakout bar, especially below these this sort of upward trend, then that's what we're probably likely to see moving forward to that. So that's what I'm seeing through there across the indices on the S&P 500. Let's go have a look at gold. And if we're using the same sort of formation, same sort of techniques, if we have a look at the maximum distance away from the moving average, so if we can see, I'm just going to bring it back in time to see the maximum distance away that I got. So this actually, and again, this is all I'm doing, right? So let me actually bring up a line here. So I'm going to make the same color through there. Right, and what I'm going to do is I'm going to do the exact same thing as before, right? So now I'm on the maximum distance away from the downside. I can see how gold doesn't get too far away from the moving average, does it? So that's probably the max. That was actually a bit of a flush crash through there. Let's actually see if there's any more. That's actually probably the maximum. That's the furthest distance away that it got before the reversal. You can see how. Oh, look at that. That's actually pretty much spot on, the exact same. Look at that there. Almost the exact same before we got the reversal. Before there, that's the maximum distance away from the moving average before we got it. Maximum distance away before we got it. And where are we right now? We're getting very, very, very close to it. Okay, so very close to it. We could have a bit more downside to come, but that one there is pretty much spot on. Like if I do that, that was the maximum distance away there. That one there. This one here was the same through there. So yeah, we're getting very, very, very close to that maximum distance away before it starts to have a bit of a flattening out period or a bit of a pullback in the markets. But the big thing also when it comes to gold is the update is that you can see here we're getting very, very, very close to two major levels of support, right? So two major levels of support. So I'll be watching to see what actually happens here. Do we continue this downward trend? Or is this just a bit of a flush move before we actually start to see a move? Do we actually start to get a bounce, something like this, and then start to see a bit of an upward trend? That's the big thing I'll be watching for on that there. And same for the mining sector as well too. I really want to see what we're getting pretty far away from the moving average right now. If you can see here, once again, the maximum distance away was that. Oh, that was a bit of a flush crash through there. Well, that's not normal activity. If I have a look at just the normal activity, right, the normal point through there, that'll be the maximum distance away. Same through there. That was actually pretty far away from that point from there to that point there. It's before the moving average. So that'll be that through there. If I look at it right now, see how we're getting actually pretty close to it, right? This is actually that was actually the furthest. So we're getting pretty close to that maximum distance away from the moving average before we start to get into that overbought, oversold level. If I use it for the upside, you can see how that was actually pretty close towards the upside through there. And then you can see how the moving average, that's where the market got before it comes. And all we're doing there, right, we're looking at the natural rhythm of that stock. Instead of using stochastics or RSIs to tell us that, we're looking at that particular stock to say, okay, how far away does this stock like to get away from the moving average before it becomes overbought or oversold in the markets there. So that's what I'm looking at through there. Let's go have a look at silver as well too. And silver, same sort of thing. We are in a downward trend, so it doesn't mean we're going to completely trend reverse, right? It just means that we're in maximum distance away before we start to see a bit of maybe a double bottom, and then a short-term pullback. But it just shows that we're maximum distance away from the moving average. And the same thing through here. We are in a downward trend, but look at this moving average. See how strong this moving average is right now. There's a lot of selling through there. So that's where I was always saying in the last few weeks to a month, don't be trying to go long the metals right now or silver because it hasn't actually given us any confirmation of breaking to the upside. So that's what I'm seeing through there, traders. And it's going to be a really, really, really interesting week. That's the big things I'm watching for. And obviously, I also run my scans as well too. And I run the scans for my trading system and so on and so forth. If you're interested in becoming an Inner Circle client where you can get my trading system, you can get my scans. Also, I'm coaching you every single day. I'm showing you my trades. If you're interested in becoming a coaching client, an Inner Circle coaching client of mine for the next 12 months plus, then just email me at haltrader@gmail.com. My last name, haltrader@gmail.com. And then what we'll do is I'll actually email you a time for us to actually talk on the phone, and then I'll see if you're a good fit for that actual coaching program. So what I want to do right now is I actually want to, that's actually finished the technical analysis side of this update, guys. What I want to do right now is I just want to talk to you about, and I'm just going to give you a bit of a story now about what happened to me a few years ago when it comes to the trading and the markets right now. Green drink, guys, green drink. So, back when Donald Trump was being elected, what happened was, and it's very, very, very important for right now. There's a big lesson in this, okay? Back when Donald Trump was being elected, and there was a lot of uncertainty around that time, right? A lot of uncertainty around, oh, Donald Trump's going to be elected. If he becomes president, what does that mean? All right? All that sort of stuff. And there was people coming out, and there was so much uncertainty, right? So much uncertainty. Just like right now, there's so much uncertainty. What does inflation mean? And all this sort of stuff. And what does the rates mean? And what's happening in the markets and all this sort of stuff, right? People are so uncertain in the markets right now. And this is where it's important, guys. We need to step back and okay, let's look at this from a non-emotional point of view, okay? A non-emotional point of view. Because look at this here. So if we have a look at the, if we have a think about that, there's a lot of emotion that's been building up right now in the markets. And so back when Donald Trump was being elected, I was trading the markets. Again, I've been trading the markets for almost 2 decades now myself. And so when I was trading through the Donald Trump election, I was doing a lot of futures trading as well too back then. So I did a lot of stock trading, but I did a lot of future trading because the system that I trade, and again, just if you email me and I'll book a call and I'll be happy to share that with you and stuff like that. If you want to become a coaching client of mine. But the thing is that because my system works on any market out there, right? Doesn't matter what market you trade. Because I trade Forex, futures, stocks. I look at all the different markets. So the whole thing about this is that when Donald Trump was being elected, there were so many people out there screaming that if Trump gets elected, the market's going to crash. If Trump gets elected, the market's going to crash. And I'm not sure if you realized, or I'm not sure if you remember, if you were trading back then, but the futures were about 7% down. I think they almost got the limit down. Limit down, which means the circuit breakers kick in and they stop the market for a little bit. They actually shut down the market a little bit, right? There was actually a big, massive movement on the downside when the whole election was going to happen, right? The whole election was happening. And then what happened is that the results came out, but then the market came screaming right back. Now, this was a short-term intraday basis, right? But the broad picture at that time, leading up, like many months leading up to that, was so many people out there were screaming, if Trump gets elected, the market's going to crash. If Trump gets elected, the market's going to crash. And all that was a screaming out there. Now, what was happening at that time is that because that's all I heard, I started to subscribe to newsletters. I started to listen to people that were supposedly experts in the markets. They've been doing it for 40 years, 50 years. They know all this sort of stuff, right? So I started looking to these experts to get some understanding of what was going on at that time because I was uncertain, right? And you may be in that situation right now where we are right now in the actual current market because you're uncertain. You're like, what does this all mean? Where's this going? What's going to happen? Oh my goodness, right? And then suddenly, what's all over the news right now, right? The exact same thing that was happening back then in Trump. So it was very uncertain then. It's very uncertain now. People uncertain. But through education, you become a bit more clear about where we're at in the cycles, right? So very uncertain about this. So, but what ended up happening, right, is that all these people out there, newsletters, subscriptions, so-called experts, were screaming crash. So, but what did I do? I actually shorted the market with $500,000. I was short $500,000. And cut a long story short with that, what ended up happening was I ended up getting out a few weeks later with a $200,000 loss on that $500,000 short. Now, if my ego was in place and I just said, no, it's going to come back, I would have lost the whole lot, because there was an options trade, a $500,000 short option position. And those things can start when the market goes against you, those things can start to move against you really quickly, right? You can start to lose 20, 50 grand a day sometimes. And it's not a pretty sight. And so when I saw this, I realized that I got something wrong. And so, but what ended up happening is that I actually went back to the charts, and I went back to simple trend analysis, stuff that I've talked about today in other videos, right? Simple trend analysis. And an upward trend, we have higher lows. In a downward trend, we have lower highs. And the market, regardless of what all the noise was saying out there, the market was saying we're breaking out now. We went from a sideways period to then then us actually starting to get an upward trend. And so the market was telling me one thing, but the noise was saying one thing. So the big key that I really want to sort of drive home right now with this is this. Firstly, what happened back then was the big lessons I learned is that when the noise is saying one thing, the market's probably going to do another thing, right? The market always does the opposite to what most people think. Most people saying one thing, then guess what? The market is probably going to do the other thing. So everyone was saying Trump gets elected, the market's going to crash. Guess what's happening? Not only did it crash, it actually went through an extraordinary bull move for 12 months. It's kept going and going and going and going, right? If you would trade the markets at that time, you would remember that, right? But what's happened? But the flip side is also true, right? On the fear side, where are we right now? So many people, right? Oh my goodness, it's over, right? Everything is over. So I really want you to be careful about that, because if so many people are saying it's over and we're just starting the biggest crash of our life and so on and so forth, guess what's probably going to come soon, real soon? Right? I'm not just saying there's not a one day that forms a bottom, right? Sometimes it's a double bottom, sometimes it's a capitulation move and then a bounce, right? It's not a one day bottom, but it starts to give you a rough estimate. Okay, with most people saying this, we're probably getting ready towards the bottom, right? And that's what I'm saying. That's why I say I believe we're going to get a strong bounce to the second half of this year. Why? It's because so many people are negative and so many things are negative out there, right? The inflation, the interest rates, the fear in the markets right now is so high. And there was one other thing that I was thinking about too as well too. So that's everything. The sentiment, right? The sentiment is so low. Consumer sentiment is so low. It's, oh my goodness, it's so bearish. But when has been the best time when you're looking at consumer sentiment, fear, and all that sort of stuff? The best time to buy is when what? When most people are fearful, right? Buy when people are fearful, sell when people are greedy, right? So right now, there's so much fear in the marketplace right now. So I really want to bring this to you, a bit of a motivational Monday for you to get you started, is to get you understanding that, and to help you understand, to come to this from a logical point of view, not an emotional point of view, right? Whenever we start to add our emotions to the markets, we start to become clouded. Whenever we start to add fear and greed to our view of the markets, we start to become skewed of the reality. Is that the right word, skewed? We start to become off balance with reality, right? So if we can don't look at it from a fear basis, oh my goodness, it's going to crash. Or don't look at it from a greed basis, oh my goodness, we're going to make $1 million. Okay, let's actually just bring this back to here. It's from a simple basis of where are we at right now? What's all the indicators saying? What does that actually really mean through history? Not from the fear perspective. And as you know, right, the best time if you look at, say, the consumer sentiment indicator, right now, it's right now where it is, it's actually around about the same time it was back in 2008. But the economy is nowhere near where it was in 2008, right? Or towards the end of 2008, 2009, right? That's how much fear is in the marketplace. So please look at this from a reality. And if I'm looking at this and I'm looking at all these experts out there, so-called experts, my bet is that we're going to find a bottom real soon, and the bottom may start to form over this month in July. And then maybe August, September, October, we start to see a very strong year-end rally, right? I don't know. But if we start to have that in the back of our mind, and then remember I said before about Trump being elected, where the market actually started to break into an upward trend, then if we can start to say, okay, then like when Donald Trump was being elected, most people, the noise was screaming crash. But then, so okay, if they're saying crash, that means that we're probably going to get the opposite. But then I'm also going to watch what the market is doing. And then the market started breaking into an upward trend. That's the confirmation I needed. Most people are screaming crash. The market's probably going to bounce. The market starts an upward trend. And then boom, we went for a 12-month run. Same for right now. Oh my goodness, it's all over. The market's going to continue to crash, blah, blah, blah. All that sort of stuff. Okay, well, we're probably going to get a bounce soon. Okay, now, but I'm also watching the market to see, do we find some sort of floor, right? Because we've never picked the bottom, but we can wait and see this confirmation to see whether we're actually starting to build up from there. So I hope this really helps you out today, traders. As I said before, if you do need some free help right now and you're struggling, then just grab that free trading course. Or if you'd like to become an inner circle coaching client of mine, where I'm actually coaching you, then just email me at howtrader@gmail.com. I'll actually book a time to actually call you, and then I'll give you all the details on there, and I'll see if you're a good fit. And I look forward to speaking to you guys real soon.